guys. Today I am joined by a mindset coach. A lot on my channel, I talk about having the right mindset and not just the right trading system, because I think that that is equally important to what you do in the market. So here I'm introducing Pat. So Pat, tell the audience who you are.
G'day guys, I'm Pat Baylooney, and like Bennett mentioned, I am a mindset coach and a mindset consultant. And I work now predominantly with traders, financial market traders, and all, I guess, different instruments and asset classes. I work with crypto traders, FX traders, stock traders, and I really help them master their mental game so they can go off and perform at a higher level in the markets, and also out of the markets as well. So I look forward to being here and sharing some insights on mindset, and I'm going to pass on some value and some practical tips that you guys can implement to your trading today to see an improvement in your results.
Mm-hmm. Yeah, I don't think I've told you this yet, but in the past few years, I've really looked into mindset work with Elliot Rowe working with poker player Fedor Holes. Elliot Rowe was known for giving really good mindset teaching to Fedor Holes, and then Fedor Holes became like the most the wealthiest poker player that there is, or one of the wealthiest, and that really opened up my eyes that there's a lot more to trading into poker, into a lot of different markets with risk and reward than just what do you do, what's your edge, and what's your system. So that's
100%.
You can get a large edge.
Completely agreed. And I work with poker players and athletes as well, and it's pretty night and day to see that once you implement and take care of the mental component of the game, how much the physical and the technical component actually improves as well. It's like they work hand in hand. I think a lot of people tend to neglect the mindset or tend to neglect the technicals and lean one way or the other. But I think you can find, and it's wise to find a synergy between both. Have really great technical skills and then have a really great mindset, and you can perform at a much higher level than anybody else. So
yeah, 100%. If you look at really, I think any number one in soccer, football, or in trading, or all these different people, they will have mindset routines. They will very likely have ways that they're able to bounce back. They have a plan for that. Cristiano Ronaldo, Lionel Messi, like guys like that, they know how to manage their minds and bounce back, even though they use probably different methods. And I really think that in order to be a top performer in your field, you really got to master this. Because if you don't, that's where you get liquidated.
100%. And I think that's such an important topic you raised there as well, Ben, on bouncing back. And I think you're right. A lot of people who are performing at peak levels have processes or tools in the back of their back pocket to deal with when they do have challenges or they do face drawdowns or whatnot. They have processes to bounce back. So do you want to share maybe a few of the things you've developed over the years to bounce back and deal with challenges?
Sure. So the first thing I'm going to say is these tips are not easy to follow. I know that sounds weird, but it might sound simple, but a lot of these mental models that you can create they take practice. But the first one is not looking to always make back what you lose. That's a really common one that me and a lot of other traders feel. Like if you're down 200 on a day, you feel down, you're like, oh, I want to get rid of this like bad feeling, even though it might be only like 1% of your investment portfolio, which in the grand scheme of things, it's not going to affect you really at all. But mentally it does. And bouncing back from that, the first thing you got to do is to convince yourself that if you make $4, you're not now down 196. You're making $4. That $200 loss, just don't, it's gone. It's just, don't think about it that way. You've made money, you've lost money. This is just another period in time because really making money it's a marathon. It's not a sprint. And anyone who convinces you that it's a sprint, it's quick and easy, they're trying to scam you. So really try to keep the long-term idea in. And I think if you do that, you're going to avoid trying to make back those losses and get liquidated. So that's number one. Number two is very generic, but basically taking a break. Going outside, which I hope you do at least once a day, going for a walk, exercising, being with friends, even playing video games, like It helps. It really focuses you on something different. Playing sports is really helpful too, because the cognitive benefits of exercising. So things like this really, step one, getting rid of the mental model of I need to make back that loss, and then two, distracting yourself and trying to do something else. Then three, if you want to talk about it, I actually do think that it helps to talk about losses with other people, because for me it just makes it a little bit better, because people can give you a good perspective and saying, hey, you're thinking about it the wrong way. You've only lost 0.5%. Like, you need to chill. And then other people's advice helps me a lot, actually. So those are my 3 steps. Third is social, second is exercise, and one is the mental model. And that's,
Love that.
I think, the best way you could bounce back.
That's awesome, man. I definitely resonate with a lot of those points as well. I think the main one there that you hear that I really love is the whole idea of perspective, and expanding your time horizons, right? Because if you're thinking day to day or week to week, then a loss will hurt. But the moment you start thinking, this is part of a yearly journey, or this is a part of a 5-year or 10-year journey, then one loss on one day is inconsequential in the grand scheme of things. So expanding your time horizons is huge. Whenever I work with clients, I deal with loss and gain a lot. People getting really depressed when they lose and getting really elated when they win. And I think one of the most common things I see is that the more people are addicted to winning and people feel the pleasure of winning, the more pain they're going to associate with losing. And there's the contrast effect there. So a big part of the work I do with traders is helping them in foresight to lower the emotional volatilities to both winning and losing. So they're not necessarily getting extremely elated when they win or extremely depressed when they lose, but they're very neutral on the outcome of both. And I think we see that sort of manic and panic state very commonly in the crypto market as well, where when there's an extreme bull run like we had in 2017 and even now, people get extremely elated by that. And then no wonder people get extremely depressed when they start losing money, right? Because the contrast is there. So I guess my top tip here would be to manage the emotions when you're winning just as much as when you're losing, because they're entangled states. Winning and losing are 2 poles of the same magnet. And the more pleasure you associate to winning, the more pain you're going to associate to losing. And I know that's probably not necessarily taught out there, but I want to throw some ideas to your audience that they'd probably never heard before. That would probably be number one. The second thing here is, and building off what you said as well, Ben, I think the perspective, the exercise, and the socials are really important. So building on top of that, extracting meaning, right? Going into those experiences where you perceive to have lost and figuring out what you gained in that moment. What I mean by that is a lot of the times we can perceive to have lost money, but what is it we gained in equal amount in that moment? Maybe it was a drive and accountability to refine our system. Maybe it was connection with certain people in our life. Maybe it was a drive and accountability to get our health in order. Maybe that loss was making us aware of things in our system that we weren't aware of. And really getting the perspective of, I didn't lose money, but I just paid tuition to improve my plan or to improve my system or to improve myself. And I think when you get into that perspective of, I don't lose, I pay to improve either my system or my plan, and you see the transformation from the money form to the intellectual form of the improvement of your plan, then it really helps dampen the emotional volatilities we have towards losses. And then you realize that I don't actually lose, the money just transforms into a different form. And ultimately, I love helping traders train them on that perspective so that they're almost invincible in the markets. When they lose, they realize there's a transformation in the money, and then they bounce back. And that's the whole idea of bouncing back, right? Because you'll only perceive yourself knocked down if you don't see the advantage you got from that experience. But if you can go in and see what you gained and what benefits you got from that, then you're not labeling that a challenge. You're labeling that a bounce back. So those, I guess, would be my 2 tips, building on top of what you mentioned as well. Just managing your emotions when you're winning, and also recognizing when you do lose, what are the advantages? What are the benefits? What are the gains you got in that moment? And where's the transformation happening? So yeah, those would be my 2 tips on bouncing back and dealing with losses and challenges in the market.
Yeah, I like your point of losses as tuition, that
Mhm.
you're just paying tuition to markets, and you just hope that that tuition, isn't as high as a US college degree.
Yeah,
No.
yeah, that's a good point. Sometimes it will be, sometimes it might not be. Um, but yeah, I think if you train yourself to think that way, there's really no losing. It's it's either winning or improving your system.
Yeah, it's like the common phrase, you either win or you learn. The
Exactly.
the phrase you see a lot of places. And one video, I think I've mentioned to you in one of our previous chats, but one video that, like, kind of a cheesy motivational video or motivational message, but it's really helped me with trading and in life, is of course, it's Jocko Willink, Good, where he had a speech on just kind of uh, reframing
Mm,
the positive when you fail at something. So it's this video where basically he's like, how do I deal with any failure, setback, or disappointment? I say good. And then he says that, like, oh, mission got canceled because he's in the military. We have more time to focus on our next mission and we get more rest. Like, always reframing these things as good. Like, oh, big loss, then he took a break. Well, that break meant you got to spend more time with your family. You're spending more time out with friends, and you're, building on other skills. Or maybe you also got your health in order too. And I think that's worth any amount of money, right? So, like, that
mm.
reframing process, I think, is a great mental model to have. So plus,
Extremely powerful. Yeah, yeah, I love that. Great, man. Should we jump in and start talking a little bit about edge and
yeah, let's do it. Systems.
uh, systems, getting an objective view on the market and that type of stuff?
Let's do it.
Perfect, perfect. Well, how about I'll jump in and share a few things, and then you can
Sure.
bounce off those ideas. One of the things I have found most powerful in improving and sharpening your edge in the markets or in life in general is learning to deal with the emotions in your head, because ultimately, uh, our emotions and our emotional responses to our environment out there distort the reality and help us not see the markets objectively. We pretty much cloud our judgment and we make irrational decisions. And I think as a trader, if we're extremely emotional and volatile in that, we're not going to make objective decisions. We're not going to stick to our edge, and we're not going to be able to execute in the markets in a way that will make us money consistently in the long run. So being able to go in there and master the emotional component, whether that be through what we're sharing today, the little tips on what we've mentioned so far, but just understanding that the emotions cloud your judgment and they will take you away from trading your plan. For me, at least the way I trade, I have the opportunity to go back through a lot of data and find my system play out. And I know that the system I trade objectively works in the market based on back-tested data and based on data in the past. So I know I have an edge with my system, and I know I need to go out there and execute according to that edge when it presents itself in the market. And I also know the one thing that will stop me from going off and doing that is if I'm either fearful or greedy of what's going to happen in the market next. So being able to go in there and balance out the fear and greed dynamic and see that when I lose, I actually gain an equal amount. So I'm no longer fearful of losing. That actually helps me go off and execute according to my edge objectively. So for me, what I've seen over the last 5 years of been trading is that going in and finding your edge and having real-time data to support that, not sticking to an edge that your mentor told you about and says works, but going off and figuring out that yourself and finding it work in the market yourself will help build confidence and certainty in your edge. And then the next step here is managing the mindset component of your trading so you can go off and execute on that edge flawlessly. Those would be the two steps that I guess I advise traders on. That's the journey I took. That really going out and objectively finding that your edge works based on real-time data or back-tested data, not because someone told you it works. So you can build the confidence and certainty in your plan, and then managing the emotional component on top of that so you can execute on that flawlessly. Those are, I guess, my two stages to refining and executing on your edge and finding the best edge in the market. But yeah, I'd be keen to hear how you approach that perspective, Bennett.
Yeah, Two things. The first thing that I've written about in some of my courses is another method that I think is a blend of mindset and of edge is making wins and losses a little bit more mathematical. So what I mean by that, constantly have an idea of expected value. So for those who don't know, expected value is basically the probability of us winning times the amount we make if we win, minus probability of loss times the amount we lose if we lose, fees included. So you
Mhm.
can back, fees at the end. And with that system, you're constantly looking at the market, not like I made 200, I lost 300, whatever. You're looking at it as like, hey, I do have an edge here. I have expected value. And in a long enough time span, your expected value will very likely convert to realize profit and to realize value. And I know that expected value is a pretty big thing in the poker community, but I think that in the trading community, it's not really talked about as much. But I mean, one of the quickest, easiest tips I can give in the blend of mindset and system is looking at expected value. So what's an example of that? Well, imagine that super simple. You buy Bitcoin at spot and you use a stop loss and you use take profit. Your stop loss is 2% lower. Your take profit is 2% higher. We're currently in a bull market in this current example. And theoretically, there's about a 50-50 shot of either being hit first, which will cancel the other. So you're either going to make 2% or you lose 2%. Now, let's say that you assign about a 60% chance that price hits that plus 2%, about a 40% chance of price hitting that that loss of 2%. Well, then you do have plus expected value. And if your probability is correct, then you really have nothing to worry about if that trade's a loss or a win. So that will be my first thing. And then my second thing is more personal. But first of all, to that first point of mathematical, do you have anything to add off of that?
No, but I think that's such an important point because people are leaving it up to how they feel in the moment, as opposed to going back to the mathematics or going back to the data and making an objective, realized decision. I think that's the key right there. Because if you leave it up to yourself, you're going to either try and avoid pain of the fear, avoid the fear of the pain, or you're going to try and seek after the greed of winning. And you're going to make irrational decisions like an animal, as opposed to being a master who knows the data and makes objective decisions based on the data.
Oh, 100%. And you just gave me a perfect segue into a personal story. So I will reveal to you guys my worst loss I've ever had. It happened in January during the bear market, and the number was bad for me. It was the worst loss I've ever had was 21K in a day, and this was in cash. This wasn't like unrealized value, like Bitcoin tanked and I have some Bitcoin. It was like I lost that amount of money in cash. And the reason I lost that, let's go into it. It's looking back, it was a big mistake, but I was able to bounce back and like make plenty more past that. But during that day, basically what was happening is I was very arrogant, and I began with a long of 5 Bitcoin in a limit order on exchange. Bitcoin went down, it filled my limit order. Then this like bear market erupted, and I didn't have a stop loss. So then I tacked on another 5. Price went lower, tacked another 5, and I was just scared of taking that $4,000 or $5,000 loss. And looking back, it would have been great to have taken that $5,000 loss, but price kept going down up to the point where I closed it right before liquidation. So I only saved like a few $1,000s, but that was pretty humiliating for me. It was very painful. I think that every trader has a story like that, whether they're like willing to be upfront about it and share it or not. Everyone's got those kind of stories like that. And I totally understand what you're saying with the animal aspect of it, because I felt like a caged animal. I felt like I was so panicked. I was like, no one else feels this pain. I was thinking the markets were unfair. I was blaming the market, which happens. And it was just, in all honesty, it's because I had no exit plan. I thought that I was guaranteed to be right that the market would rise. And leading up to that, the final thing I'll say on that is my system before that was like I would take a few gains of like, oh, I'll make a few thousand here, make a few thousand here. But the issue with taking a lot of small gains without a stop loss and risk management is there will be that one day. I know it might not feel like it, but there will be that one day where things just, and if you're not ready for it, then the market's going to take all your hard-earned cash. So that's the worst story I've ever had. Lots of small wins that led up to a 21K loss. It sucked. I was able to bounce back. I took about a week off from trading and I went back to kind of study, looking for some different edges. I found some, and all was good after that. And I was able to bounce back, but it was very painful. And I don't recommend you guys go down that same route. So learn from my mistakes. So hopefully you won't make your own.
Thanks for sharing that, dude. I think that is a great segue into our next topic on the bull market psychology, where when you're doing well and you're starting to build consistent profits, and what when you mentioned there was you're building smaller profits, and you push yourself into a bit of a state of pride, right? And I think that's very consistent mindset that when you're winning, that what we can tend to do is we can build ourselves up, we can be in a state of pride, we can puff ourselves up and exaggerate ourselves. And we get to the point where we then project onto the market what we think is going to happen, as opposed to listening to the market, what it's communicating to us. Because whenever we're in a state of pride or in a state of shame, we're not connecting with the market. We're not listening to what the market's trying to communicate to us, because we're either above or below the market, trying to project, or we're injecting the market onto us. So being able to, when you're winning, being able to self-govern and go in there and see what you've overlooked, what oversight you've had, to bring down that state of pride and to self-govern, so you stay in a place where you're not above the market, but you're communicating and you're listening to the market and what's trying to communicate to you. Because I think it's very easy in a bull market, when you're doing really, really well and starting to make some good money, to overlook things and become complacent and start to stop doing the things that got you here in the first place, and avoid risk or over risk, right? Start risking more than your plan states. And then this is ultimately where, when the market turns around eventually, or has a correction on a day, that we're susceptible to taking larger losses. So I think being aware and self-aware enough that when you're doing well and going on a bull market run, to self-govern and to keep yourself in check, so that you're sticking to your processes, you're sticking to your plan, you're sticking to your risk management procedures, so that if these inevitable down days happen, that you've got your things covered and you're set and you're ready to deal with those things. So I think that's a great example as well, where you knew that you're sort of building yourself up a little bit, and maybe overlooking some things that you would usually do prior, and then the market came in there and humbled you. Because here's the thing: you can either humble yourself through self-governance and have a look at what you overlooked and what the drawbacks were of what you did, or the market will come in and do it for you. And what I've observed with the best traders is that they learn how to do that themselves. And usually they learn how to do that themselves because they got humbled by the market previously as well. So I think, Bennett, you're, and myself included, right? We all have those experiences, and then you learn to go in there and self-govern and take care of what you can control, so the market doesn't have to humble you. But yeah, that would be my perspective on a bull market. And when you're doing well, keeping yourself in check, so you're not overlooking the things that got you there in the first place, and keeping to your risk management and your rules and that type of stuff.
100%. I've been in crypto since 2016. I started posting videos early 2017 was the first video I posted on my channel. I've seen, bull runs, bear runs. I've seen lots of crazy things happen in the space. And yeah, it happens all the time. The bull market psychology, where people buy a large bag of altcoins on Binance. We're in a bull market, so they rise, 10, 20%, and people think that they're geniuses. It's great to be confident in your ability, but you don't want to be delusional. You have to always ask yourself, what really is the reason that this went up? Is it because I did study and I was able to calculate the right time to buy? Am I using great algorithms? Am I using bots? Where's my edge? But what a lot of people do is they buy these bags, and then the minute that the market just tanks, they become trapped in their underwater positions. So for those who don't know, even though I think a lot of you probably do know, or just don't know the term of it, underwater, trapped, it means when you buy something at spot, when you buy something that you own, but it's lost value since the price you bought it at. So basically, if you sell, you're selling at a loss. And it's that mindset of I am selling at a realized loss that isn't really good to have, because obviously, a robot wouldn't think that way unless you told it to, if it was artificial intelligence. it's just, this is a kind of psychology that's just natural to us humans, because we gravitate toward pleasure and winning, and we don't like touching fear, and not fear but pain, the pain of losing 10% on your coin, if especially if it was already up 20%, now you're down 10%, it just feels so gross, and like you feel disrespected. But in reality, I think, so that you don't make those mistakes, for those who are listening, the thing you have to do is you got to question your edge, and you have to relentlessly question what you're doing. I mean, I'm sorry, but if you're just deciding to buy a bunch of altcoins because Bitcoin's up and your RSI on the 5 minutes oversold, I just don't think that's good enough. And you have no exit plan. You just think that RSI is oversold. I think that in the long run, you will be a losing trader if you keep doing that. I think that if you have stop losses, at least you're already above a lot of other traders. And then a step above stop losses, if you're beginning to hedge and learning how to take hedge trades with exposure, then you're already above that too. But the people who don't really continue to learn and continue to be curious, just buy something and just are like, oh, it went up 20%, I'm a genius. Look at this. That's when they get humbled. So whether you guys are in the pain cycle right now or in the pleasure cycle of making a lot, just know that those cycles don't last forever, even if it's pain. The market won't always be dumping, if it is right now at this very moment. So making objective decisions is tough, but the best way to do that is reliance on a system that you follow to the T.
Completely agree. Mathematics and the system.
Yeah.
To that, make the rational decisions. Awesome. And did you want to get into talking a little bit on lifestyle and the other component? Because ultimately we have, you can classify how many areas you have in your life, but I generalize my life into 7 different areas of life. And trading is just one of those components there. There are still 6 other components to your life that need to be taken care of. And any of those areas, and a lot of traders think that, at least from what I've seen, that I can just focus on my trading and not worry about everything else. And what I tell them is that any area of your life that you don't empower yourself, you're subject to being overpowered by someone else or having distractions in those areas. And what I mean for that, for example, is if you're focusing all your energy in trading, but you're not taking care of your health, then you're most likely going to have challenges with your health, which will then become a distraction for your trading. Right? For example, you're focusing a lot on your trading, you're not taking care of your health, and you're now extremely tired, you're fatigued, maybe you're putting on weight, and that becomes a distraction that takes away from your performance in trading. So what I really encourage and what I really share with clients is like almost a holistic view on your life. Figure out how your trading is, what role that plays in your life, but then also put energy into your other areas of life. And I mean, one thing that I have found extremely important is to identify what's truly most important to you. Because a lot of people say they don't have discipline to go off and exercise and do certain things. And truth be told is that sometimes those things just aren't important enough to us to go off and do them. Because nobody lacks discipline. Everybody has discipline. We just have discipline towards things that are truly important to us at that point in time. So if we're struggling to go off and exercise or do something in the other areas of life, and we want to put all our energies into trading, what I would advise on that is go in there and see how exercising and doing those other areas of life actually serve and benefit your trading. Go in there and make yourself aware of how going to the gym or going for a walk, it doesn't have to be going to the gym, right? It can be as simple as going for a walk, actually helps you improve as a trader. And how socializing maybe, 30 minutes a day or whatever it is, helps you as a trader. Because the more associations you can make between empowering your other areas of life and that helping your trading, you're going to have more motivation and discipline to get those things done because you see them as important now, right? If you see your health and your exercise taking away from your trading, of course you're not going to do it. But if you see how you going for a walk or you going to the gym helps you reset and it helps you clear your head and it helps you, get out the house a little bit so you're performing at a high level for your trading, and you make yourself aware of those things, then you're going to have more of have more discipline, more motivation to actually go off and get that task done because you see it helping and serving what's most important to you. So usually what I do with clients is we go in there and we identify all the highest priority things in the other areas of life that they would love to get done. And if their trading is truly their highest priority, we link all those other areas to their trading. And we see how doing those other things in the other areas of life actually help them perform at a higher level in their trading. So there's not this guilt feeling when they go away from the charts. They don't feel guilty of I'm stepping away from my charts, but they see and they're aware of how stepping away from the charts is actually a benefit to them performing at a higher level as a trader. And I think that being able to go in there and organize and structure your life in a way that's it's balanced and it's holistic, ultimately helps you perform at a higher level as a trader or as a poker player, as an athlete, whatever it may be, whatever industry you're in. But that's sort of my perspective on it. I mean, I've had a background. I was an athlete earlier on. So a lot of those things I'm taking on board and I'm implementing into my trading now. And I'm seeing the improvement in my trading from a performance level because I've implemented those things in as well. So that's my perspective on, I guess, health and socializing in terms of trading. But yeah, I'd be keen to hear yours, Bennett.
Yeah, if I was to run a hedge fund with 10 guys or girls or whoever's on this hedge fund, and I could make one rule, the one rule would be they have to have some form of exercise. It's not because of fitness, it's because of the cognitive benefits and just how mentally sharp I personally get when I go through, like really good cardio for run, long walk, the thoughts you get on that walk when you're like not on your phone, like you get all these like really good thoughts about markets and about other parts of your lives. So if I was to run a hedge fund, I would say exercise like top priority. Now for the habit of exercising, because I know a lot of people are like, oh, go exercise. How do I do that? One habit I think that was told to me that's pretty easy to implement is pair something you don't want to do with pleasure. So what I mean by that is if you go exercise, like let's say it's a brisk walk on the treadmill, like play a video game while you do that, or watch a Netflix TV show while you do that, or if you're Pelotoning, like do the Peloton and then watch, I don't know, like the show Billions that I really like, you know, with Damian Lewis, like watch that or watch a movie, do something. You're basically pairing your exercise, something that you might not want to do, with the pleasure of listening to really good music, playing a really good game of like Civilization or StarCraft or whatever, you know, something like that. That is a good way to start. And then after you associate stuff you don't want to do with more pleasure, you can then make it more of a habit. So you kind of take away eventually the video game or the show part, and it's just a habit. Oh, I do it every day at 4. It's 4. Let's go. It's just when I exercise just about every day, so it's a habit of mine. I feel this like urge at like, 4 p.m., sometimes 3 p.m. Like, oh, I gotta go. Let's go to the gym. And I think that the first building block of that habit is pairing it with pleasure, with whatever show, video game, or whatever kind of thing you want to do, or just really anything that you enjoy. Pair that with exercise. Now, for how important I think it is to live a balanced life, I do think that there will be times in a great trader's life that you will have times of not have balance, and that's perfectly normal. But that can't be your entire life. That's not sustainable, and any amount of money you make, it's just not going to be worth it if you neglect every single other part of your life. However, there will be parts, it could be days, it could be weeks where you're just honed in. And I want to tell you guys, that's okay. That's okay. It's just that know that eventually you are going to have to shift out of that system and begin to implement, like, whether it's exercise, social stuff, better sleep patterns if you're going to bed at 4, walking, more time with family, picking up a different hobby, like something different, because I think that being multifaceted is a very good trait. So if I had my perfect hedge fund of traders, they would have to be multifaceted. They have to work out. And of course they would have good mindsets because they'd be coached by Pat. So.
That's awesome. Yeah, I love that. I think I'm just thinking back through my journey, and definitely exercise I can associate with improving my trading. But I also think that having something else there, like a hobby or like an extra business, that obviously once you've got your data, your statistics, your trading plan there, and you put the time and energy to develop that, I think having some form of something else to be able to allow yourself the time to go off and forecast and scope the market, see if there's opportunity there. And if there is, setting alerts and setting orders, and then going off and doing something else with your day. I think that there is such a powerful thing, because it gives you the opportunity to, the accountability to be more prepared, the accountability to execute when the positions come around, and not just sit at the charts all day, hoping for opportunity to come around and impulsively making decisions, but you've got a proper structure to your day as well. So I think this is probably one of the advantages of working in trading, or if you're a full-time trader, working in other businesses, as long as they're not, taking too much time and energy where it becomes damaging to your trading. But I think there's, definitely advantage to having, like we've discussed, a more holistic approach to trading, or more balanced approach to trading, whatever it may be.
Yeah, I don't think that people recognize enough that outside things help your trading more than trading can help your trading. Because looking at a chart for 10 hours, I would take, the guy who wakes up at 7 a.m., goes for a run and makes a great breakfast and then looks at the chart. I put my money on that guy. I don't really want to put my money on the guy who's looking at it 10 hours a day, even if he's very mentally sharp. Like it's just, I'd rather put my money on the guy who's like, woke up early, went for a run, is very healthy. Like that person is going to be laser focused. And, I think that's why a lot of high performers live like that.
Mm-hmm. Completely agree. All right, dude. Well, that was, I think, a great conversation. What are your thoughts on that? Do you have any final things to mention, or to wrap up, or say?
So as you guys know, my website, Bitcoin Trading Practice, is where I have a lot of different courses for passive income with Delta Neutral, and with some more directional trading with a book I wrote called Gravity, and also a course I made called Master the Market. And those are all going to be linked in the description below. I will also be linking Pat's stuff in the description, so you can go to his website, you can go check out what he has to offer to improve your mindset. Now, Pat, do you have any final last tip to the people who made it this far in the video for benefiting their trading?
First and foremost, if you made it this far, thank you for sticking around. I just want to reiterate and stress, and of course, this is coming from a mindset coach, but I want to reiterate and stress how important taking care of the mindset component is, and the psychology component. It's easy to overlook that when you're doing well. It's very easy to overlook that. But I think when you're doing well, it's the perfect opportunity to go in there and use that confidence and use that certainty to refine and learn and continue to grow. Because it's very easy to get complacent when we're doing well. So yeah, if you guys have any questions or queries or additional things that you want to ask me in terms of mindset, feel free to reach out. I've got a lot of stuff on my website. We've got some free content. I also run free discovery calls if you wanted to go in there and do some coaching. So I'd love to share what it is or how it is I can best benefit you guys in terms of your trading journey, in terms of your life journey, from a mindset perspective.
All right. Thank you so much, Pat. And to everyone, happy trading.